Welcome to BlackUSA.news morning show. I'm your host, William Honolulu Jr. Join us as we explore the news and opinions that impact our community. We break down how the major stories have a very personal, local, and racial impact. No topic is off limits, but even if the conversation gets rough, we're always going to keep it real. Greetings and salutations, all my people out there in internet land. I am William Honolulu Jr., and I have the privilege and honor of serving as the host of the Black USA News Morning Show. Today is Tuesday, April 5th, 2022. This begins actually National Student Employment Week. It's really important that our students who are in colleges and even in high schools have the opportunities to get jobs and some experience, because it goes a long way in helping them develop their career. Actually, Coppin Academy in Baltimore is actually hiring tutors for math and English for their after-school enrichment program. If you are interested in getting a job as a tutor, working with young people and really helping them develop the skills that they need to be successful, hit us up at info@grindinggang.com. Let's see what else is going on. Oh, big shout out to, as always, to the production team. Couldn't do it without Kyle Crazy Horse Morgan and Brandy Raymar. It is amazing to have such a great production team who has your back and make sure you have the things that are necessary to bring your audience what they want and what they need. Make sure that you go into the description and you'll find a lot of great information about our sponsors and also about our contest, about some events we have going on. There's a lot going on with Black USA News, and we're so happy to be able to share it with you guys. Make sure that you all like and subscribe to the channel, because it really makes it so that the algorithm picks us up and it gives us an opportunity to expand our reach even more. Today is a really exciting day, really great. We get to partner with our friends over at Fosterpreneur and talk about, we'll give you an example of what Fosterpreneur is and what it does. I've been working with Erica Myers and the team over at Fosterpreneur, and Erica is a guest on the show. And actually, we've had several Fosterpreneurs who've been guests on the show. And so we want to just give you a sense of what the program is like. We're going to just share with you the finance section, the section we teach on finance. We're going to share that with you, and a little bit about what makes the program special. So I'm excited to share this with you, because it's a really big part of the things that I do in my effort to give back to the community. So welcome aboard. And here's a little bit about Fosterpreneur. Hello, my name is William Honolulu Jr., and I have the privilege of being the chair of the board and the lead instructor for Fosterpreneur Incorporated. And I want to tell you a little bit about what we do and why we do it. Our mission is to provide entrepreneurial support and resources to alumni of the foster care system and underserved youth, so that they are inspired and equipped with mindset development and coaching to become successful entrepreneurs. Our vision is to develop a new generation of leaders who achieve their dreams, live their passion, and are able to be their authentic and whole selves. Underlying our mission and vision is the knowledge that personal characteristics like resilience, tenacity, adaptability, and problem solving are as important to entrepreneurs as funding, experience, and education. Many alumni of the foster care system have those characteristics that will propel them to be successful entrepreneurs. We believe that with our trauma-informed approach to entrepreneurial training and social-emotional support, we can help these leaders grow their businesses and their dreams. At the core of the Fosterpreneur Model is the social, emotional, and business support we provide. We provide the support to not only people who are actively in a Fosterpreneur cohort, but we provide the ongoing support to members of the alumni network as well. We do weekly check-ins while they are in the Fosterpreneur program. We provide them opportunities to network with business leaders and other professionals who may be able to be resource partners in the future. Each of them receives business mentorship on an on-demand basis. We have a knowledge library of videos and books and articles that they have perpetual access to. We are developing and growing our very robust alumni network, and they're able to access that during and after the program. We have business evaluation tools and data gathering tools that they have access to and can continue to use as they grow their business enterprises. We do monthly check-ins once they become alumni of the program, and we also try to help them find access to capital. There have been a couple of our alumni who we've been able to help access capital and other resources to grow their business. And most of all, our trauma-informed approach, where we focus on helping them make decisions, gather information, and navigate the sometimes rough emotional waters of being an entrepreneur. The Fosterpreneur Model focuses in on practical application of business principles. So we take all of the aspects of business and we break them down into the decisions that need to be made and the activities that need to be engaged. We start off by focusing in on the mindset. We start to get our members of our cohort to understand the genius that they bring to the table, how to get beyond some of the limitations that other people will place on them in their entrepreneurial journey. We also focus very heavily on ensuring the distinction between facts and feelings. While they are both important to business development, it is important to understand where they are different. We talk about the target customer and how that informs the market. We talk about not just traditional marketing, but really focusing in on the practical application of making your target customer aware that your business exists. Then we transition from that awareness into the engagement, which would be similar to a traditional sales model where we get the customer to commit to giving them money. And when you move beyond engagement, it's delivery, where you actually deliver your service or your product to your target customer. And evaluation is part of our process for everything. When you are looking at the regulations, that's more about the business environment and the landscape, and that includes your contracts, your government agencies, and things like that. Operations focus on the management of the business, who's in charge, who does what, and what activities do they engage. And then there's risk. What are the things that are going to disrupt the flow of money, to harm your reputation, or to expose you to legal liability? And finally, how does all of this work to describe the story of your finances? And how do you navigate your finances in a way that helps your business grow? All of these things together is what we believe makes Fosterpreneur special. Thank you for your time, and let's continue with the graduation. Thank you for joining us at this session of the Fosterpreneur Business Planning Workshop session. Today we're going to move from the activities that you've created to operate your business and how that translates into finance and financial management. A reminder on how to use this video. First, make sure that you listen carefully. You may also want to take notes as it helps you to remember the content that we covered. When you think about the topics that we cover, really focus on what does this mean for my business? And don't rush yourself. Take all the time you need. And if you don't understand something, make sure that you reach out for help. And always remember that Google and YouTube can really be great resources to help you understand some of the content we cover. So as we start talking about finances, I want you to reimagine the way that many of us have been taught about numbers and about how those work. Many of us have been made to be scared of numbers, that they're complicated. And for a lot of us, we don't focus on the numbers in our business because of that relationship, what we've been taught about it. But think about it this way, that the numbers are just a way for you to tell your business's story. Imagine trying to tell the story of the three little bears, the three bears, without using numbers. The title doesn't even work anymore. And so when you use the numbers, it's not that the numbers are guiding your business, they're guiding your decisions. They tell you more about what's happening. You can use the numbers to explain to people if your business is working well or if your business is not. And you can use those numbers to make corrections in your business operations, your models, and your cash usage of cash to make your business better. The next thing is to remember one of the adages that emotions and money don't mix is absolutely false. Trying to have a business and trying to deal with money and pretend that you aren't having an emotional relationship, what it means is that your emotions will just start controlling the relationship because you're not even acknowledging them. They get to define your context because you may be scared or feel uncomfortable trying to balance your books. So what ends up happening is that you just say, hey, I'm going to wait, or I'm just going to give this to someone else, and you don't know what's going on. So be okay with your emotions, and like anything else, if you are having difficulty navigating through these emotions, get help. There are people who want to help you, people who have experience, who are qualified, who are licensed to provide the type of emotional and mental support that you may need, because entrepreneurship is rough. The common language of business is finance. So when you try to explain your business to bankers, accountants, investors, people who want to do larger transactions, you're going to have to understand the vocabulary and the language of finance. We're going to talk a little bit about some of the vocabulary that you'll need to know as you're communicating about your business's operations. But there are a lot of great resources out there about understanding how the financial vocabulary works. And these are just words. A lot of this stuff is stuff that you already do. It's just that there is another word to describe it, or another word that that industry uses to describe that. Most of us know what it feels like when you have a bill that's due today, but you may not have money coming in until tomorrow. Well, that's an issue of cash flow. Well, that's something we've experienced, but now we understand that there's the word cash flow that helps define it, or helps other people in other places understand it. Business math is just a word problem. I don't know if I can stress this enough. It's nothing to be scared about. Word problems in school, they made them scary because there were right or wrong answers, and a lot of times the frame of reference of the question we didn't have. We didn't understand why John would have 5 apples and then want to get 10 more. We wanted candy. That didn't make any sense to us. And so we couldn't get past the preliminary, the threshold question, let alone understanding the concept. But this is different. Your word problem is, how much money do I need to make to live the life that I want to live? Well, I hope we can find the solution to that word problem. Understand what your goals and values are, and make sure that you are anchored in them and that your business processes revolve around your goals and your values, because it is possible, and I've seen it happen actually, where people start focusing so much on making the money and the financial aspects of the business that the quality of service goes down. The focus on employee or vendor satisfaction goes down, and everything becomes about the money. Now, if that's your business model and that's what you want to do, have at it. I don't think it's a very good business model, and I don't think it will cause you to last too long in the marketplace. But that's a decision you get to make. But if whatever your goals are, if you want to achieve them and manage your finances well, you have to have them all well defined. A lot of times people want to know, what is the answer to this question? Well, how do I know how much I can sell? A lot of people ask, well, how much do you think you can sell in the first year? And a lot of entrepreneurs, when they're honest, like, how the hell am I supposed to know? I'm just starting this business. In some cases, I haven't even sold the first thing. Well, yes, that's exactly how you should feel. Because all people are asking is, based on your best guess, what is it that you're going to be able to do? That is business. You are making a decision. You're using information, you are using data, statistics, you're using mentors and written information to gather so that you can make a decision and then engage in activities. And sometimes there will be a gap in the information you have. That doesn't mean you don't make the decision. Because if you don't make a decision, that's still a decision. You may actually say you don't have enough to do anything, but that's a decision. Once you make a decision, your decision may end up being, hey, let's do a little bit so we can get some more information so we know how to better invest our resources. You may not know how many telephone calls to a potential customer or how many emails to a potential customer it's going to take before they respond back to you and then buy something. Well, you shouldn't know that. How would you know that? That's an unknown. What you do is you try and you find out, and then once you find out, then you go add that into how you operate. Now you have information. Now you can make a more informed decision. Be very honest with yourself about your feelings, skills, and challenges with money. We talked a little bit before about emotions and money, but if you don't have certain skills with money, if you have certain emotions, or if you have certain challenges, there are some of us who use retail therapy, meaning that if you are feeling down, you go out and buy something to make yourself feel better. If you know that that is something you do, be honest about that, and then build a business plan or a financial management plan around that. But don't try to pretend that these things don't exist. By the way, I'm also not suggesting that you go and share your challenges and everything with everybody out there. But I'm also saying you have to be honest with yourself if you're going to build a business that actually is going to achieve your goals. Find quality financial institutions and financial help that fits you. Every accountant doesn't fit every customer. Every bank is not your correct fit. Every payment service system may not work for you. Some of you, Clover may work wonderfully, and others, PayPal may be a dream, and for some of you, your financial institutions payment systems may be it. You need to make sure that it fits your business. And a lot of this is going out and trial and error. Talking to other people, getting some of those trials to see how things work, and if they don't work, go to the next one. Keep working until you find out what works for your business. It's also important to remember that as you start your business and as you are starting out, you should not expect yourself to know everything about the financial aspects of your business. Again, for many of us, this might be the first time that we are getting actively engaged in business finances, which means there are going to be things that you are going to do wrong. You are going to make some financial mistakes, and that's okay. And make sure that most are not terminal. But when you think about the fact that you should know it and that you're going to make mistakes, you start to see how important it is to have a good business advisor, a good accountant, or a good bookkeeper. These professionals are going to be very helpful in the success of your business in the short and long term. Consider the contingencies when making your funding decisions. A young lady that I spoke to not too long ago, a client, one of the challenges that she's having is that some of her clients don't pay on time, and some of them try not to pay at all. She got really upset about it, as she should. But what we ended up coming up with is that the cost of litigation would be far more than the value. So what we did is that we created a payment system, and the payment system is front loaded, and so that and we also put in conditions that they couldn't move to the next section of the service until they paid for the first section. And so that way she was never going to be added too many hours of service and not have the money to compensate. But again, now we had to make modifications in her business process to deal with the contingency or risk of clients not paying. Prepare to track and document all your expenses. One of the places that I see entrepreneurs having challenges often is that they don't document their expenses or track them even, and then have to go back and recreate them, say when they're looking for funding or when it's time to sell the business, when they're getting an audit or things like that. Build into your business system enough automation that things are captured in a timely manner. Most of the systems that I help small businesses create are automated and have very little engagement for the human interaction, so that way things just move seamlessly from one place to the other. So making sure that as you're building your business model, that you are tracking all of your expenses. Cash flow is the most important financial concept in small businesses. When I've seen that there are businesses that are not even profitable, but they have positive cash flow, meaning that they have more money coming in than is going out, and they're able to get over times of low profitability and make it to times where they have greater cash investments and can make some more robust choices. So making sure that as you are looking at your business operations, think about when cash comes into your business and when that cash will leave your business, because that is going to be critical to your survival and growth. Remember that your business financial information or your numbers are always connected to a particular time. That's why they look at balance sheets, and we'll talk about those a little bit later. They look at balance sheets and all these things month over month or year over year, because they want to look at the growth rate, the change. They want to see how things were on, December 31st, 2019, say, and then see how things are at the end of December 31st, 2020, and then compare them to December 31st, 2021. By comparing all of those things at the same time, you get to see if there's any significant change year over year. That's also one of the reasons that if you look at the stock market near the end of the quarters or the end of calendar years, end of fiscal years, you see a lot of businesses selling assets and things like that, so they can get that date, that the numbers that show up on the 31st of the year, the same as better than the ones that come the year before. You also, can't highlight this enough. Please expand your financial vocabulary. Understand that the more of these words that you know and you're able to use, the more effectively you can communicate that you are competent, not just in operating your business, but communicating it to people who have resources and making them more comfortable investing those resources with you. And again, please never, ever, 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 never, never, no hesitate on reaching out and getting some help. We're going to go over a couple of the concepts of some of the vocabulary that is going to come up throughout the rest of this video. The first is assets and liabilities. So assets are the things that you have that have value versus the thing that you owe that have value. So think about it in terms of a building. A building can be an asset because it's a thing that you own. You own a piece, or real estate. You own a piece of real estate. That is an asset. But let's say you have a mortgage on that piece of real estate, then that mortgage is the liability. One of the other ways to think about this, so that's the way that assets and liabilities are looked at from the perspective of capital or bookkeeping and accounting. One of the ways to think about assets in terms of your operating money or your operating activities is to think about, is this something that brings me money, or is this something that costs me money? So is this directly related to money coming into my organization, or is this something I have to pay to keep my organization operating? The next words are revenue and expenses. Now, revenue and expenses, we're all very familiar with these concepts in some way, shapes, or form, but revenue is money that comes into the business. Expenses are money that goes out. Did you get paid, or did you pay something? Did you pay someone? When you think about revenue and expenses, that's the question that helps you distinguish between the two. The next is fixed and variable. These are about costs or expenses in many cases. So if you think about, so let's say I'm going to another city and I'm going to stay for 2 days. Most of the time, I wouldn't go to that another city and get an apartment, because you pay for an apartment for an entire month. If you only use it 2 days, you still have to pay for the entire month. Unlike a hotel. A hotel, you pay for the days that you use. So if I'm only going to be in town for 2 or 3 days, it makes more sense for me to get a hotel instead of renting an apartment. But if I'm going to be there for 20 days or a month, it makes more sense for me to get the apartment than it does the hotel. The hotel is an example of variable costs. You only pay for the days that you use. The apartment is a fixed cost. Doesn't matter how many days you use, you still have to pay for it. Then there's direct and indirect cost. Direct costs are the things that are specifically used for a customer. So if I sell lipstick, the lipstick that when I buy the raw material to make the lipstick, or I buy the lipstick and then I resell it, when I buy the lipstick and I sell it to one person, that is a direct cost. My cell phone bill, my website, I would sell multiple lipsticks or multiple products on my website. So it wouldn't be just the website wouldn't just be focused on one customer. It would be focused on my entire organization. So I couldn't track it back to being directly related to one customer. So you will have costs that are direct and costs that are indirect. Your accounting cost, that's indirect because it's for your whole business. Staff that work just with one customer, well, there'll be a direct cost because they work with just that one customer. So the balance sheet. This is where the assets and liabilities become a big deal. What the balance sheet tells somebody is, what do you own and what do you owe? On the asset side of the balance sheet is cash, accounts receivable. Accounts receivable is money that people owe you. Any inventory that you may have, and any capital assets. Capital assets are ones that, like real estate or heavy equipment that is designed to last multiple years and not necessarily to be consumed with normal operating activities. So paper wouldn't be a capital asset. It would be more like a supply. But the vehicle you use to deliver products may be considered a capital asset. Then on the liability side are any wages that you owe anyone, any debts that you have outstanding, any leases or contracts that you have, any accounts payable, and accounts payable is money that you owe but you haven't paid yet, and any taxes that you may have. And again, this is designed to figure out what does your business own and what does your business owe. The next financial statement that people in business are going to want to see is your income statement or profit and loss statement. The question that this statement answers is, are you profitable? So they look at your revenues, which again is all your sales minus the cost of goods sold. The cost of goods sold is the cost of inventory or whatever you had to do to make that sale. And then they look for income from other sources. So there may be other things that your business does besides sell things, or you may have income from selling some equipment that you didn't need anymore. That's not part of your normal business operations. That's something special. So those would be considered some revenues. Then they look at the expenses. They look at the expenses of sales cost, how you market and stuff like that. Your general administrative cost, any research and development, and any depreciation. Depreciation is an accounting concept. You don't really have to deal with it a lot right now, and I don't think that this is the appropriate platform to get into like a deep dive on depreciation. So make sure that you ask your tax, bookkeeping, or accounting professional to explain depreciation to you so you understand what it means on your financial statements. Then they take a look at any interest payments that you have outstanding and any taxes that you owe to see if your business is profitable. Okay, so the last financial statement I'm going to talk about is your cash flow statement. Now, what cash flow really measures is more money coming into your business than going out of your business. That's it. Because cash flow is like water to your business. If you don't have water for a little while, then you can survive without it. But if you don't have water for too long, you're going to become dehydrated and you will not operate well. And so on your cash flow statements, the movement of cash in and out of your business is divided into normally 3 categories. Operating activities, those activities that are the core of your business. So if you practice law, the legal practice, the money coming in and going out regarding the legal practice. If you sell hot dogs, the money that comes in and out from selling hot dogs. Then there is investment activities. So if there are additional capital contributions from existing investors or any dispersal of dividends or owners draws or things like that, that is a movement that is a movement of cash in and out that would be classified in the investment activities. Then there are financing activities, so like loan and some other types of investment proceeds. You and your financial advisor or accountant will define what that looks like for your business. But cash from loans and payment for loans, those are financing activities, and you want to measure how much cash is going in and out in all three of these different categories, because that information tells you if you're losing money in financing activities, that means that you may want to rethink or refinance or rethink your financing activities, or shift some of your operating activities to offset any losses. And so by understanding how cash is moving in and out of your business, you can make a more reasonable judgments about how you should operate your business, and also communicate to people about your need for cash before you actually are really in deep need of cash. Also remember, your cash flow is defined by specific periods. So you're having a great cash flow in one part of the year doesn't mean that you're going to have a great cash flow in another part of the year, which is why when you are thinking about your activities and the movement of money in your business, you need to think about any kind of seasonality. Is there going to be a big change going from month to month? And take that into consideration as you are planning and estimating what your cash flow is going to look like. So let's go over where we've come so far in the program. You understand and have started making decisions and have made decisions about your target customer, and you've identified the activities that you need to do to get that target customer. You've broken those activities down in your awareness, and then transition them becoming aware of your business to them engaging your business and you getting a commitment for payment from them. Then after you've gotten that commitment to pay, you've delivered excellent service and products to them, and then you've evaluated how that system works and how that transaction worked, and determined whether you wanted to continue to engage that customer or customers like that in the future. You've looked at the regulatory and other obligations that you have operating your business, and made those decisions and found and scheduled activities to address those. You've created an operations plan and identified the risks to your business and what you can do to mitigate those. Now, what's left is for us to focus on finance. And remember how we think about business. There are decisions, and then those decisions lead us to activities. What you also know about this slide is that I've taken our sessions and I have crosswalked them with what it would look like in a traditional business plan. So as you have been looking at your target customer, when you look at a traditional business plan, that portion of it is called the market. When you are thinking about awareness and how to make your target customer aware that your business exists in the first place, that part of the traditional business plan would be called marketing. And once you get them aware and you get them to commit to paying you money for your services or products, that is the sales portion of the business plan. Now, everything that you do once you have sold them the product or the service and you deliver that service, that's your business description in a traditional business plan. Now, the evaluation section, that should be part of every one of these portions of the regular business plan. The regulations portion of our process, that would equate to the environmental section or the business environmental section of your traditional business plan. Now, we talk about operations and the resources and the individuals who will be controlling those resources and processes. Those would be the management sections of your business plan. And when you look at the risk section and the way that we did it, that would translate more into threats and weaknesses section of the SWOT analysis. Now, for the strengths and weaknesses portion of the SWOT analysis, again, you'll find those also in delivery and the business description. Before you continue on, please know that the way we're going to describe everything from this point forward is based on the activities homework that you did in the last section. And just to recap that form or that activity, the first thing is that in that table, you list the activity. So describe what activity you'll be completing. And then identify whether it was in the awareness, engagement, delivery, evaluation, or regulations category. when you are talking in the column that says benefit, describe why that particular step is necessary. When thinking about the resources that are needed, think about what you need to actually make the activity happen. What type of personnel, what type of time, what type of supplies, what type of technology, and those things. And then after you write the resources out, then start thinking about how much do each one of those resources cost. Then really think about how much time the activity will take. And when are things due? Like, how much time from the previous activity do you have to complete this activity that you're talking about now? Now, also determine what is the chronological order that this particular activity falls. And if it happens at the same time or concurrently with another activity, I would suggest that you write an alphabet with that. Who is the person who's ultimately responsible for ensuring that the activity happens, and then thinking about how do you transition to whatever the next activity is. What is the next step, and what do you have to do to get what you've done in this activity to the next one? And then just looking at any other notes that you may need or have on that particular activity. So for the example of how to convert the activities that you have into the financial formats in this process, I'm going to use this as an example for a business that writes business plans. So one of the activities that this business is going to do is to post Facebook ads. The category is awareness, because the benefit is to get customers to become aware of the benefit of the service and go to the website and register to get a call for service. So you see that I've already thought through how this goes to the next step, at least for my target customers' activities. So the resources I need are the words and images that will cause my target customer to want to get more information. I'm going to need business Facebook ads. I'm going to need a device with internet access, and I'm going to need scheduling services and software to get the post posted. So this is what the resources and how I identified it. Now you can go into as much detail as you want. You may think that this may be a lot of detail. You may think that this is not enough. It's up to you, because remember, this is your business. Now, as I'll go back down to the cost of the resources, $50 for a content creator per month, and the consulting for them, to develop the content for me to put in my Facebook ads. $152 for a 5-day ad on Facebook. And I don't need any money because I already have a computer, but you see I still counted it in the resources that I need. And $15 per month for Hootsuite, which is a social media scheduling application. Now, I'm looking at this as far as my time is concerned. It should take me an hour to negotiate, look over the content, approve it, and things like that. That's my best estimate. Now, it may take longer, it may take shorter. To set up the Facebook ads, once I get the content, should take me 10 minutes. And what date is it due? That's the first step. So, it's due whenever the first step is due. The person responsible I have is the marketing manager. Now, that person is still me. But as I am thinking about who should be responsible, or what role in my business I am behaving in when I'm doing these things, I put marketing manager. The reason why is that as I am thinking about how my business will grow, I realize that I need somebody in that role, and that person will probably be the marketing manager. That'll be the person who's ultimately responsible. And again, that might be, 10 years from now or 2 months from now. But knowing the type of person I would need in that role will be helpful in me trying to grow my business. In transition to the next step, that would be getting the phone call and having them click on and making the phone call. Also had some notes, and it said based on the last time that we advertised using Facebook, for every 300 people who saw the ad, 10 of them clicked and set an appointment, and 1 became a customer. We use Hootsuite to share the content among our personal pages on Twitter, LinkedIn, and Instagram. Most of our target customers are primarily on Facebook, and seeing the ad on other platforms will reinforce the messages and potentially attract clients who are outside of the target. That seems like a lot of detail, but one of the reasons I put that there is so that as I'm explaining to people, if I'm bringing a new person on and I need them to do it, now I have these notes and I know what I was thinking. I could just give this to them and they understand what I was doing. Like, instead of them asking me, why are we posting on Facebook and not Instagram? Hey, this is why and this is how it works. And it's also very helpful for me to remember. So if I start seeing more of my people come from Instagram, or if I need to make some kind of modifications, I know why I did this in the first place. Now, here's some basic questions that you're going to need to be able to answer when you start thinking about figuring out how much revenue you're going to be bringing into your business. And remember, revenue means just the money that's coming into your business. First is, what is the basis of your price? Is it per hour, per product, per event? An example is, I charge my clients per business plan written. I estimate the job cost and the number of hours I thought it would take to complete the plan and multiplied it by my hourly rate. The next thing you should consider is, how many customers do you estimate that you will get per month? In this example, I estimate I'll have 6 business plan writing clients per month. How much do you charge for your product or service? It varies greatly. The minimum is about $1,000. The maximum so far has been $3,800. The average is about $1,600. How many units of your product or service will the customers purchase per transaction? For me, most people just buy one business plan. How often will the customer repurchase from you or purchase from you? My customers buy one business plan and they don't normally purchase from me again. However, they give up to 2 referrals over the next year. So even though I don't get, as I'm looking at my financial projections, I need to figure out how I add in those 2 customers. Because remember, those 2 customers don't have to go through all of my awareness activities if they're being referred to me. So that's going to be a different type of target customer. How much do your activities, revenue, and expenses change each month? Seasonality. So in this example, I estimate that the demand for my business plans will increase by 20% in January, February, March over the average months, and decrease in June, July, August by 50%. The reason that I know this is that I've been doing this for a number of years, and I've seen what the demand does up and down. I've also talked to some other business professionals. The reason I have the answers to these questions is because I've done it. And when I didn't have the answers to these questions, I've just guessed. I've done my research and tried to figure out what the best answer is, and once I have that, I go and test it and see how good it is in real life, and then I adjust my calculations accordingly. So let's take a look at these tables to do the basic calculations on how you start to figure out your revenue. So you think about what it should be for an average month. Okay, so for every customer comes in and they get one business plan. And I estimate I should be able to get about 6 business plan customers per month. I also know that on average, business plans run about $1,300 per business plan, which means that the gross sales in a month are going to be about $7,800. So in an average month, it's going to be about $7,800 in revenue. But I already know that in January, February, March, I'm expecting 20% increases in revenue. So that means that in January, February, March, I'll have $9,360 in revenue instead of my normal $7,800. Now, if you look at April and May, you'll also notice that those are going to be normal months. So I'm back to $7,800. But if you see what happens in June, July, and August, I know that there's going to be a dip of 50%. So my revenue is down to $3,900 a month for those months. And then from September to December, they're just normal months, and those will be $7,800 a month. And aggregate, it'll be $31,200. So for a total for the year of $86,000 in revenue from business plan writing. And so, as you can see, understanding how your money works and understanding how things work seasonally can really help you plan better. So now I know that in January and February, I need to save a lot of money to help me make it through June, July, and August. Okay, so these are some examples of expenses. When we think of expenses in the context of this series, Think about them as the resources that you have to spend money on. So things like salaries. If you have staff people who have to do things, those are going to be part of your expenses. The cost of goods sold, so the cost of inventory and things like that. The cost of advertising and promotion, real estate, and any heavy equipment that you may have. Also, think through your utilities, including your internet, your phone, any other technology utilities that you may be using. Think of the supplies that you're using, paper. Interestingly, think of cleaning supplies as well, because unless you plan to stay in a pigsty or something akin to it, you're going to have to pay for cleaning supplies, and that's a business expense as well. Please contact somebody about insurance. The worst case scenario is you talk to them and they tell you that you don't need any of their insurance. The best case scenario is that they help you understand, they help you understand how you need insurance to protect yourself from certain risk. You get the insurance and something happens, and guess what? You're covered. Figure out your licensing and government annual fees and things like that. Any loans that you have to repay, and your taxes. Please, please, please do not forget about your taxes. As you get ready to start calculating your expenses, make sure you answer the following questions. What is the resource or the vendor that you're going to be calculating the cost for? In this example, is the content for 4 months 4 posts per month. How much did the resource cost? This particular one costs $50 to the content creator per month, and they'll do some additional consulting. How many times will I use the resource per activity? I'll only be using this once per month. Is the price fixed or is the price variable? Is there a price difference between whether we use it or we don't? In this case, this particular resource, the price is fixed. And how much seasonality will be required for the utilization of this resource? How does it change on a month-to-month basis? I don't know. So let's look how we calculate this particular activity. Now remember that this activity is placing Facebook ads. Now each resource goes along with that activity. So the first resource is the content 4 posts per month. The number of units only get 1 month of custom content. How much is it per month? It's $50. That is a fixed cost, so it doesn't matter how many of those posts I use. My cost is $50. She can give me 4 posts, and I just only decide to use one of them. That still costs me $50. And the number of resources for the transactions for this activity, I'm only going to do Facebook ads one time this month, or one time per month. And so that means that the total gross expense is $50 per month. Now let's look at another expense, the actual Facebook ads themselves. The goal is 6 clients. I put that in there to remind me why I'm doing it. The category or the activity again is the placing of Facebook ads. The ad, to run one ad for 5 days, I think it's $200 the way that we had the scope done. That's a fixed cost. Doesn't matter, if people see it, people click on it, it's $200 per run. And I'm only going to do right now 1 run per month. But you could see if I was going to do 2 runs per month, that would double the gross revenue, so that's $200. So I take the amount per unit, the number of units per resource, that's 1 ad running for 5 days, multiply it times the dollar per unit, that's $200. Then I would multiply it again times the number of runs. Now, since it's only 1 run, that means it's total $200. But if that was 2 runs, that would be $400. Now let's look at a new situation, or a situation that's a little bit different than the other two, when we're talking about the device that you already own. The device with internet access, I have that, and it's a fixed cost. So even if I was to buy another one, it wouldn't just be to place Facebook ads this time. It would have a lot of other implications. So it would be a fixed cost. It would be a fixed cost because I already have it, but it would be one of the indirect costs that we talked about earlier. So the Facebook ads and placing a Facebook ad to get a customer, that is a direct cost. That's what you're doing. But this laptop or a phone or tablet, that would be an indirect cost. And the other two follow those same things, or those are the patterns of their other examples. And so you see my total cost is $264 per month. We hope that you found this information helpful, and we thank you very much for joining us. For those of you all who are working with the rest of the program, please make sure that you submit your homework that is related to this topic on finance, and we're going to keep your businesses moving. Have a great one.